Welcome back as we watch your ag commodity trade here on a Tuesday, and I want to welcome into the conversation Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And Brian, I'm looking at the grain markets here, and in fact, we can bring up the corn market here. It looks like in the overall grain complex, it's like they're getting an injection of a little helium here, if you will. They're really starting to rise a little bit. March corn up 1 1/4 penny. It's now a penny higher at 3.89, even though it's still a very narrow trading range here. Soybeans, check out soybeans right now. We have the January now 5 3/4 higher at 9.27 3/4. That's about 7.5 cents off of our earlier low today, and only 1 tick off our high. Well, if we look at the wheat, in Chicago wheat, we have the March contract 5 1/4 higher at 5.55. Well, heck, that's a full dime off of our earlier low this morning. That's quite a turnaround. Now on the Kansas City market here, we have the March contract quoted at 4.66 3/4, and that one is 4 3/4 higher. In the Minneapolis wheat today, here you have the March 1.5 pennies higher at 5.38 1/2. About the only fly in the ointment in the excuse me, in the crop markets would be the cotton market. And I was looking at the cotton here, where we have the March contract now quoted about 34 points lower at 66.63, and now 66.65. Let's take a look at these overall. When you look at the grain side of things here, Brian, any idea why we're starting to lift here in the last half hour of trade?
Well, the one thing we did not see in the overnight trade was fund demand start to show up. So really no buying came into the market, and that allowed grain prices to ease back on a little bit of profit taking, I think, was the main feature. Weather forecasts for Argentina particularly are wetter through the weekend, and that's really what they need. Is we've been pretty dry in that part of the continent there in southern Argentina, central Argentina, but now the fund demand's starting to pick up, and that's lifted prices here. We've seen a big move in bean oil, which of course spilled over into soybeans, and that really kind of lifted these other commodities. Hard to imagine corn and wheat trading a lot lower when soybeans and soybean oil are trading higher. So we're seeing a lot of spillover strength out of the soy complex over into corn and wheat.
Why the strength in the soy oil right now? We have January up 81 points.
Yeah, there's a lot of talk here that the current tax bill debate is including reviving the $1 per gallon biodiesel tax credit, and that would be retroactive back to January of 2018, and it would extend through 2022. So we are seeing a lot of buying interest in that market, and we're seeing a little bit of a spread trade against soybean meal as a result as well. Now, the NOPA crush numbers that came out yesterday on the surface maybe looked a little negative as they were below expectations, but they were actually the second largest for the month of November in history, trailing last year. So really not a bad number, but soybean meal unable to advance much because of such a surge in bean oil prices.
Do we typically have a lot of cash grain sales as we get toward the end of the year for tax reasons? And could that pressure this grain market now in the next week or so?
A lot of producers are taking advantage of a rally here in the futures market along with tighter basis levels, and they're making some cash sales and then coming back and trying to reown it on the board, either on futures or options market. As we get closer to the end of the year, we may just see a little bit of positioning ahead of the end of the year tax season, trying to balance sheet themselves and kind of neutralize that tax liability. But a lot of times we'll see a little bit more movement after the first of the year, as futures tend to rally into early part of January.
Well, it looks like that positive atmosphere that's arising here in the grains may be spilling over into livestock, and we'll take a look at that in just a minute. We're talking with Brian Hoops, and we'll be right back. We're back with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And as I mentioned before the break, we were starting to elevate on the grain trade. And I'm starting to see signs of that now in our livestock, too. Let's head over there and look at our futures. On the live cattle trade right now, we have the December now 45 higher. And February is now 17 cents higher. We're at 127.42. That would be roughly about a $0.50 above our earlier low this morning. And now we're within a nickel of our high of the day. April now 13 higher at 128.05. On the feeder cattle side, feeders have been leading the pack, and we have the January now up 90 at 146.15, and we have the March contract 88 higher at 146.47 right now. That's about 22 cents off of our high of the day. All right, let's switch over to the lean hogs. Lean hogs were lower on the open. Well, they're not anymore. We have February 13 higher at 70.63, and the biggest mover is now April. It is 65 higher at 78.10. And Brian, that happens to be making a new high for the day as we look at it here. So what's going on here in this livestock trade? Getting kind of jumpy here.
Yeah, starting to see a little bit of buying interest in this cattle market. Show list numbers are down this week, and that is giving firm ideas to the cash markets. 208,000 head on the show list. Last week we were at 242. So I haven't seen any bids yet. They'll probably wait till tomorrow. That's what they seem to do, is wait till about Wednesday, and we get the Fed cattle exchange auction going before we see much in the way of cash direction. But, with the on-feed report coming out on Friday, we may start to see some cash trade by Wednesday into Thursday, but most of it's probably going to occur on Friday. So, the placement number, I think, will be down considerably from last month and probably a little bit below last year's levels. So I just don't see that much downside risk in this cattle market at this time. We had a big rally on Friday. We may see low profit taking from time to time, but again, not much downside risk.
Well, it's actually going to be a few feature-packed days when it comes to livestock as we get toward Christmas. Because as you mentioned, Friday we have the cattle on feed report that'll come out. And then coming up on Monday, I believe, then we have that quarterly hogs and pigs report along with the cold storage report. That could tend to be a big market mover too, right?
Yeah, as we start to get these reports wrapped up, I think things will really start to slow down after that. This is the last full trading week of the year. So next week you get into the Christmas holiday season, then you get into New Year's. So there'll be a lot of people kind of watching these reports and then starting to pack it in for the year, and volume will get very light. But that doesn't mean that you can't see some big moves. In fact, sometimes moves are exaggerated when you have low volume.
All right. Thank you, Brian, very much. Appreciate it. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Hear what he said? Last full trading week of the year.
He's on to what we said earlier.
Yes, he heard you, didn't he?
Thanks, Marlon.